Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. As has been the case since October, we can see very well that resistance at 362.5 continues to hold very well for this market. The last few times that the market has touched these areas, the market has failed at this 362.5 number. And most recently, you can see at the end of our vertical turning point, the market did respond and move down from that timeline. We're now looking at the market that has touched support today near 353. The market actually had a fairly big down day, but has recovered much of that move, and we're now closed at the top third to top fourth of the day's trading range. Tomorrow is the big WASDE report, and not only for corn, but for wheat and soybean as well. We expect that whatever news that we do here, we have found that historically that this particular report tends to set the tone for what we anticipate for the trend over the next several weeks to months for these grain markets. So it's going to be very important to look through and digest much of the information that we do find. Below, we can see additional support at 343 3/4 in the event that the market would make its way through here. But what we believe at this time is that the market will continue to potentially oscillate between these 362 and 343 levels, and whichever area or zone the market looks to break through first is probably going to be the direction that we continue to move in. You'll also notice that the market has been overbought, but if the market's able to stay overbought for some time, the market will change from being a sideways market to an uptrend. And similarly, had the market been below or oversold and then continues to stay oversold for some time, the market will move from being a sideways market to being in a downtrend. So right now, the market is poised to potentially turn from being in a sideways market into an uptrend if it is able to hold these levels and break out. A clear close above 362.5 puts us in a position where we will be testing 372, and a close above 372 indicates that we should touch 382 at a minimum. Intermediate resistance above that 362 level would come in at about 369. Additionally, we like resistance at our 1x1 down angle, which is this red downward sloping line. In the event that the market's able to make it to that level, that's going to be the first area of major resistance that the market looks to pose. But as you can see from this movement that we've seen recently, the market's had a nice string to the upside. We're now sitting on a small pullback with a reversal bar. And so tomorrow, depending on what happens, we would not be surprised to see a nice move with volatility to the upside, given the nature in which this market has been moving. Soybean futures also finds itself at a critical juncture ahead of the WASDE report. This most recent upward swing, if we look at the pullback in which we're in right now, the low that came in is exactly at 61.8%. That would be your typical Fibonacci retracement level, and that happens to coincide with the low coming in at 998.50, which is our point of control. So you can see very well that the market came in, has made steady support at our Fibonacci retracement level. As well, you can see here one of our natural support levels as well is operating as a very clear node right in the middle of the highs and lows of this recent band that the market has made. It also had been oversold, but it's finally starting to peek its way out of being oversold, which tells us that the potential for this market to potentially trace its way up this 2x1 angle is possible. So tomorrow's report is going to be very key in the way in which the market looks to respond to that information. One of two things are happening. Either this accumulation that we're seeing here, or at least this sideways movement that we're seeing here, is going to end up being either distribution or accumulation. The way in which it breaks out of this pattern is going to tell us the direction of the trend, and there's a good chance we can see the market trace up from here. Yesterday was the nodal timing point that we talked about before. on January 10th for a potential turn. The market has actually moved down into that January 10 timeline, and we also are sitting right up against volatility-based support. All these things are pointing to the potential for the market to turn up from what has been this short-term downtrend with a nice potential for an up movement from here. As far as wheat is concerned, the move off of this December 23rd low has been very impressive. The market essentially kept making lows against our 1x1 downside angles, and as it's come down, it's been able to bounce off of that 1x1 angle very well. Our most recent move shows us a very nice strong move to the upside, and it was not until today that we saw a pretty big give back off of those moves. But again, part of what we would like to see is for the market to continue to hold support. It closed about midway of the day's trading range, and as long as we're able to make sequential higher lows, especially if the market's able to come in here, one of the things we talked about in our most recent newsletter is that we were looking for resistance near 429 to 430, with the possibility of the market continuing to drop down into this dotted line timeline. In the event that the market drops into this timeline and finds support somewhere in the neighborhood of 412 and possibly maybe right in the middle here at about 400 and then turns back up, that would give us our third sequential low. In doing so, the market is then poised for a potential very big explosive move to the upside. So the way in which it approaches this upcoming date of about January 14th or so, or January 15th, as the market moves into this timeline, if it does in fact make a higher low and turn back up, be very much on the lookout for a nice potential swing to the upside, telling us that wheat looks to be on a parabolic move to the upside. A couple key overhead resistance levels that we'd like to bring to your attention. First of all is the 180-degree mark off of the low. That would be at 433 3/4, which would be a half cycle to the upside, where we could potentially find some very good resistance there. That point actually happens to coincide with being one standard deviation below the point of control at 434 3/4. Also, in terms of support below, we continue to like that 411 1/4, but more importantly, 406 3/4 also looks to serve as a very important timeline. We have volatility-based resistance overhead, which was part of why we thought the market was due for correction. And as the market has now come down, you can also see our vertical timeline pointing to a potential top for the market, and for the market now to continue to trail down into this gray zone and find a potential low. We talked about the January 15 date before. If it were to exceed and continue going down from there, but still find support at about 406 at the end of our time zone, we would then still continue to see the market with sequential lows, where we would look for the market then to make a move to the upside in a strong fashion. Upon breaking 433 or 434, look for very strong momentum to the upside and potentially for the market to reach up above into the 360-degree mark, or twice the distance from this move here up to the other side. We will close with the March crude oil futures contract. And as you can see from this movement here, the market came in to about 52 for very good support here. We have our ABC movement now. Depending on what the market does from here, we still like support at about 50.36. If the market were to break 50.36, then we're looking for the market to potentially continue lower and to find more weakness. So as long as we're able to hold this area, we could turn up. Again, you'll notice that we have our vertical timing line coming in conjunction with this move, and today we have a nice move to the upside. If we have continued strength over the next couple of days, this market then is poised for the next leg up. And what that means in terms of an Elliott wave count, this is wave 1 with its 5-wave subcount inside, with an ABC correction in the middle, and the next move to the upside should be at least as long as this move here, as long as we're able to maintain or stay above this 50 number or so. Thanks so much for joining us for our weekly market update. Look forward to touching base with you again next week.